Hey, what's going on, everybody? Sorry for the late weekend prep and review. I was a little busy this weekend, but I don't really have a lot to go over. This week, all I did was, as it shows right here, I only did one trade. I didn't trade it all this week because of elections. So last week, all I did was closed one trade, and I'll review that here in a minute. That was NDX Iron Condor, and I opened up these 4 trades. So a quick $760. It was small position, nothing crazy, but nonetheless, I had stuff working. So review the trade. So from my stop levels, I was risking $200. I made a net return of 3.74 from my stop level, and only had the position for 4 days. That's what 4 days expiration means. And I got $4 of credit for it, and I closed it for 20 cents, which was 95% of the credit received. Sorry about that crazy little arrow right there. All right, so the setup. So when it goes to my Iron Condors, what I need is I want yellow 10x bars, which is what the NDX has right here. Obviously, all they're yellow bars. Excuse me, yellow bars. And I also want to see no squeeze. So like right here where it's black and red dots, that's a squeeze. When they're green, that means the squeeze is fired. So this is this fired momentum, and then this is the consolidation phase. So in this consolidation phase is where I'm looking for, all right, so there's no squeeze. A squeeze basically by definition, if you want to think about it in the simplest of terms, is a expect a greater than expected move. So in this time frame, no squeeze, so therefore I don't think there'll be a greater than expected move. And so basically what that does is that's 2 check marks saying things should move sideways. Yellow 10x bars, sideways momentum. No squeeze, within expected range move, so therefore sideways momentum. Now the next thing I use, so also right here, here's my stop, which is the 50 SMA. I was expecting that to hold price up as it moves through here. So that's just how I got my downside stop. All right, and this is the weekly wires indicator I use. So if you're not familiar with this, I'll do a quick explanation. So this is L2, L1, so basically lower level 1, lower level 2. Then it appears H1 for higher level 1, and then H2, higher level 2. Now what does all that mean? So right here, this is my weekly chart. So therefore, these pop up every 5 days. So it measures the expected move every 5 days. So this indicator analyzed 269 weeks, and within those 269 weeks, price has closed inside of H1, L1 roughly 60% of the time. So in between this line and this line, 61% of the time. And you know what? I just realized something. This was on Friday. We'll come back and reference this one. 1 second. Here we go. I want to show this one because this is the chart that I entered on. So this is the day I entered the trade. So you can see it went past L2. It was down at the 21 EMA, which is that white line, and here's a 34 EMA. So I was expecting price to, since it's down below, as it is extended, to shoot back up. So then I sold below the 50 SMA, and then I sold the 1260s, expecting price to be stalled within 4 days at the 786 fib level. So if we did go up, I did not expect us to go past this level in 4 days. All right, I'll go back to explaining what this meant. So once again, L1 L2, H1, and H2 somewhere way up here. So it closes in between this L2 and H1, which is somewhere way up here, 81% of the time. So my thought was sell below the 50 SMA, and that price will slingshot up higher, but not break this level in 4 days. So thought process is, like I said, you have your yellow 10x bars, sideways momentum. No squeeze within the expected move. Now within the expected move, I'm expecting price to move back up to this area. I hope that makes sense. I might need to work on explaining that. And then if you come to Friday, because I take the screenshot on Friday, you can see what happened. So it did come down when I entered. Price came back up into the close. We gapped up. And then look, we closed actually right back in L1. So it was way down here and right back up. And there's tons of ways you could do this. Like it could have been I could have just done a put credit spread, but I did Iron Condor because of the yellow 10x bars and no squeeze. So anyways, close that one up real quick for easy profit. And you can see there's the options traded. All right, next I got a VIX hedge. Basically, so this is an out of the money hedge. So when for protection, since the COVID thing is a little bit crazy and the election stuff is all nuts, I did an out of the money debit spread for a hedge. So bought the 25, sold the 30s December expiration for $1.14. So basically, if the market does crash, the VIX should go up. Therefore, this will hedge my longs. That's the reason behind that one. I like to use the VIX for hedges versus call credit spreads on other stocks. Yeah. So that's all this is, just a hedge. Nothing crazy to talk about there. Next is CRM. So Salesforce. I have a 7 days expiration. 252.45, we'll put it for 160. So I'll talk about the setup that I have going on. So, like it says right there, a daily squeeze with momentum shifting positive. So the black dots indicate a low compression squeeze. Momentum is starting to turn blue, which is where it's shifting positive. And then the EMAs are stacked positive, which is these lines right here. If they're all stacked up in a line, that means they are stacked positive and momentum is pushing higher. So we have a squeeze. This is the multi-time frame squeeze indicator. So what this does, the top line is all squeezes for the time frame that it says inside it. And then below it says the momentum direction. So if you look at Salesforce, we have a lot of squeezes in the medium squeeze area, and they're all starting to fire to go long. So I'm expecting, we'll say the 3 minute squeeze of fire, then fire the 4, and then the 5, and the 6, the 10, 15, 20, 30, blah blah blah, up until it gets to the 60, the daily squeeze, which will fire long. Is the expectation, but since it is a credit spread, it doesn't exactly have to really take off to be profitable. That's a good thing about credit spreads. So the point of this picture right here that I use for my journal is I see where all the squeezes are. All right, so my 10x bars, what I'm looking for here. So we have the purple line is 34, white is 21. We have yellow 10x bars. It does kind of look like a flag, like a dirty flag. But nonetheless, I'm expecting price to stay above the 382 fib level and 250, the psychological level of 250, and the squeeze momentum to push prices higher. That's all I'm expecting. Oh, and also another thing about these 10x bars on steroids, you can see the color of the 10x bar in all the time frames. So basically, since this is a 5 minute, I can see from the 5 minute and higher. This one only shows the daily because it shows the daily chart and then higher. Right here, once again, like I said earlier, EMAs are stacked positive. The VWAP is stacked positive. What that is the daily, weekly, and monthly volume weighted average price is all stacked positive. Because some institutions buy stocks based off of VWAP on a larger time scale. So if they're stacked positive, then it may potentially mean that institutions are buying it up. And this one is a monthly point of control to hold. That's supposed to say hold. Price up. So right here at this blue line, that is where most or all, or sorry, that is the highest. That's the level where the highest amount of volume has occurred. So with the price right here touching it, I'm expecting price to at least hit it and hold higher and not break below it. If it does, then I'm wrong, and that's at the 250 level. So if it breaks below it, then it's easy to assume that I'm wrong on direction and can get out for a loss. But yeah, that's the setup right there. Just expecting price to stay above 250 going into Friday. Next is Spotify. Got an Iron Condor. This same setup as I did with the NDX I talked about earlier. So once again, I'll explain this part too. So these turquoise color lines, those are my break-even points for the Iron Condor. So we have yellow 10x bars. You could also see that price has kind of just been moving sideways. And once again here, I use these price points to choose my strikes. And then my stop loss is right here, the 50 SMA. So if we close below this blue line that's going right there, then below the 50 SMA, I'll take the stop on the trade. And I'm risking only 200 bucks to make 600 bucks a small trade. And then here are the stats for the Iron Condor that I talked about earlier. All right, and once again, no squeeze. Boom, no squeeze. It's just expecting it to chop around within those price, within those sold strikes. That's it. All right, Facebook, I got a bull put spread. So credit spread was a 9 days expiration. So this one does have a squeeze. So we have a squeeze, bullish momentum. We had a big, basically a Dragonfly Doji right there. So implying that price came down, the buyers came back in and bought it up. I'm expecting or wanting price just to stay above. Actually, I didn't even know what I sold on it. Let's look here. I forgot. Okay, I sold the 272.50s. Okay. So I'm just wanting price to stay above the 272.50, like I said. And if it does, then I sold right below the 34 AMA. So all I want is price to go like this or higher. I guess it's right here. Bullish momentum with multiple time frames. Squeezes have fired to the upside. Yellow tennis bars, and also I only drew on this one that the price kind of seems to be in an upward channel. So my analysis is correct. It went below it, closed right above it. I entered here, and then if it just chops around in this channel, then I'll be good for the position. All right, last but not least is Tesla. Everyone loves trading Tesla. I have a 9 days expiration Iron Condor that I got for $1.55 of credit. So my thought process on this one, I went back to my weekly wires indicator. I sold right below L1 strike, but I'm not expecting price to make new highs, so I sold those strikes. So as long as price stays in between here, I am profitable. And this is the same setup as NDX and what I did on Spotify. All the setups are the same, just different stocks. So this one does have a squeeze, but the reason I was okay with taking this one, even though it has a squeeze, is because you see how far away it is still before it gets to the midline. For a few days, I could expect it to still need to compress before it fires high or back low. So that's why I was okay taking that one, even though there was a squeeze. Once again, yellow 10x bars, it's obviously in some type of range, or it is in a range, which is what you want for Iron Condor. And I sold the 460 calls and the 395 puts, so just for visual aid. See 460, so it's right outside the Bollinger Band, and then this one, and this is also within the expected move according to the market makers. So it is usually identified as a decent trade. Once again, only risking $200. I'll make about 600 as well, and that is all I have for this week. And if you're new here and found this beneficial and helpful, please subscribe, tell your friends about it. If you're interested in these indicators, I'll leave some links in the description box below for you to obtain them at a discount. Or if you have any questions about them, feel free to ask me on here, and I'll be more than happy to clarify anything on the setups or how to use indicators or how they work or what I personally think of them. Anyways, thank you very much for watching, and have an awesome rest of your week, and good luck.